All right, guys, I just want to cover a few last things in this video. These are kind of some random things I get questions about, and they don't really merit their own video. So I'm just going to kind of lump them in here, and hopefully these answer some questions here. So a common question is, I have employer benefits, right, at work, and they provide group life insurance, group disability coverage. Do I really need to get private policies, right? Do I need to go out, get my own life insurance, things like that? Employer benefits can be great that way, okay? Especially if they get group policies. What happens is because the employer is saying, hey, we're going to insure, 3,000 people or whatever, they go with a lot of leverage to the insurance company and say, hey, we're buying for a lot of people. We want some big discounts for the volume. And so these group life and group disability policies often can have costs quite low. If your employer is paying the cost, then fantastic. Usually for life insurance, they will pay for part of it, and accidental death and dismembership or dismemberment, membership, accidental death and dismemberment, which is similar to life insurance, but also covers accidents and things like that. Usually they'll cover some minimum amount that they'll provide, and they may even provide some for a spouse or for kids. But then if you want to purchase additional amounts, supplemental life insurance coverage, then you can through the group policy. Usually rates are actually pretty decent. So definitely take a look at that. If that's offered to you, take advantage of what they're offering. If you can bulk up your coverage, usually you don't need a medical exam unless you go, to a really high amount of coverage that you sign up for through your employer, then they may require a medical exam. But a lot of times you can do multiple of your income, and it's relatively inexpensive as far as the premium goes. Now, same thing for disability, by the way. A lot of times short-term disability is covered and long-term disability is mostly covered with you paying some or, some combination of that. If you have those types of policies, you just want to look through the details, right? Based on all the information I've done in the previous videos. Disability, right? Make sure it's own occupation, see what the percentage of income that they're going to cover are, see what the waiting period is or the elimination period before long-term disability kicks in. All those details, you just want to understand what they are, okay? But group policies and group benefits can be fantastic for you. The one word of caution I would have here is based on how frequently we change jobs nowadays, especially younger generations, right? We're moving, every 2 years to a new company. There's a lot of startups out there and a lot of companies with varying benefit packages. So you might have great coverage at one company and leave and go to another and you don't have any. And then you have to get your own policies anyway. And so generally what I recommend is that you go out and get private policy for life insurance. You go out and get private policies, get the amount that you determine you need in a private policy. If your employer provides some, then that's extra and that's great. If they're saying, hey, you can purchase supplemental insurance, maybe you don't need it because you have your private policy, so you don't need to get it. But if they're providing some, then why not, right? It's yours and it's extra. But don't count on the employers because that can change from place to place. And it might just so happen that when you go to your new employer and they don't offer it, and then you go to get your own insurance, maybe your age, right? You're certainly older. Maybe your health status has changed a little bit. Maybe your life circumstances have changed a little bit that make it harder to qualify or more expensive for you to qualify. So you just don't know what the future holds. Better safe than sorry, in my opinion, in terms of life insurance. For disability, a lot of times the employer coverage is sufficient. Now remember, if the employer pays the premium, then your benefit is going to be taxable to you. So you have to look out for the numbers there and know what to plan for. But if you're also paying, but you're just paying a discounted rate because it's a group policy, and it can be a great way to get it. The same thing applies if you leave that company, go to another and they don't offer disability insurance, then it can be tricky, okay? But you can go out and shop your own policy at that point. You can always have a private policy, go shop and get one that covers a certain percentage of your income that you just carry privately. I've got 2 disability insurance policies, one that covers up to a certain amount and then another one that's supplemental on top of that. So I carry 2 and they're private. They stick with me. And I'm obviously self-employed, so that's my option now as well. So you can always do, So anyway, you could get a private policy for a portion, and then if your employer has some, it's supplemental. If your next employer doesn't, at least you have some coverage in place. Anyway, so just some things to think about in terms of that. I've had a lot of questions about premium financing. Premium financing is simply where this typically is for very wealthy people, by the way, or businesses, okay? If you want a lot of insurance coverage, but the premiums are expensive and it's a big strain on your cash flow, then you can go out and get a loan from your bank, essentially, a bank loan that will pay the insurance premiums. So you're financing the premiums. You're not paying the premiums out of pocket. Now, this usually you are loaning, this loan is based on some type of collateral, and it could even be an interest in the policy benefit. So there's a number of ways it can be structured, but typically it only makes sense if you have a substantial amount of money that you're looking to, like a substantial amount of coverage you're looking to purchase, and it is cost prohibitive, and you don't want to pay that out of your cash flow, or you can't, then you can do premium financing. There's a lot of strategies when you get to a certain point, and we'll talk about this in the estate planning module, but we've all heard of the death tax. When you get to a certain point, money that you pass on to heirs is tax-free, generally speaking. There's a lot of caveats there, but generally speaking, it's tax-free. But once you hit a certain point, a dollar amount and above, they actually charge the death tax, right? Which can be as high as 40% of those additional dollars. So sometimes wealthy people, there is a strategy using life insurance to pass on money and kind of avoid that death tax. We know the life insurance death benefit is tax-free, but that does add to the total number you're passing on. And so if that total number, again, surpasses this limit, you're going to pay taxes on it. It's not an income tax on the life insurance. It's just the death tax, okay? Estate tax. So if there is a way to purchase life insurance, structure it in a very certain way using trusts to bypass, get it out of your estate so that it's not calculated inside of the total amount of money you're passing on, and avoid taxes altogether with that sum of money. So sometimes they might go buy a ton of coverage, finance the premiums, so that a huge lump sum of money can pass on to their heirs tax-free. So that's usually what premium financing can help with, okay? And then the last thing here is some people get a lot of heartburn when talking about, insurance, different coverages, premiums get expensive. And I do understand that, okay? I understand. I've gone through the same discussion, right? In my mind, like, well, maybe I should get less coverage because then it's just cheaper. There are some ways that you can structure that, obviously, but I want you to view insurance. You are actually getting value out of having insurance. Okay, it's not a waste of money. You're not just throwing money away for no benefit. Even in the cases where you don't have a guaranteed money coming in or guaranteed coverage, right? With term insurance, right? If it expires, you don't get the death benefit. You just paid the premium the whole time with no death benefit, right? Even still, you are receiving value by paying the premium. By having the insurance, you're receiving value because you are receiving peace of mind and protection against risk. You are paying to be protected just in case. And that can take a big load off emotionally. So it's important to view insurance not as a waste of money, but as an intentional use of money to protect against loss. It's reasonable, necessary, and you should just plan on baking the cost of that into your expenses and just plan on it being there year after year. Okay. So there's a lot of ways to go out and earn extra money. If you're really worried about that extra $1,000 in premium for your life insurance, just go out and earn an extra $1,000 and it's covered. There's a lot of things you can do to increase income instead of just chipping at expenses. This is a necessary and reasonable cost, right? You could also get rid of your $1,000 car payment, for example, and fund a reasonable cost this way if you're having heartburn about it. So I just want you to view it in a very rational and reasonable way and just bake it into your expenses and move on. Okay, that pretty much wraps up this module all about insurance, different types of insurance. I hope this is helpful for you, and I hope this really helps you see how you put it into your plan. Again, It's all about your why. It's all about protecting your lifestyle, your family, your loved ones, and making sure that you are protected against loss and financial ruin if something bad happens. Awesome, guys. We'll see you guys in the next module. See you soon.
Strong financial plans aren't built on fear. They're built on intention.